You are listening to ChartingWealth.com for Thursday, the 16th of March, 2017. Fed meeting took place on Tuesday. Everything is up. The S&P 500, the Qs, QQQ, the NASDAQ 100, TLT, which is the 20-year bond fund, and gold. Let's jump right into the S&P 500. What do we see going on? Well, the two-day chart crossed over going down on that two-day candle on the 14th, and even with the up movement throughout the course of the day, up 0.87%, we still don't have a crossover going up. In fact, we see that the derivative oscillator continues heating up going down, and the PPO is still in a negative. PPO is still in a negative. We, of course, have violated both the weekly up and the two-day trend line. Both of those have been violated as far as those trend lines go. If we look at the weekly chart, it is pretty much sliding sideways on the PPO. The price movement, even throughout the course of the day on Wednesday, did not close, well, closed just a little bit above where we saw the price hit on that weekly chart all the way back on the week ending the 3rd of March, but the price movement never reached anywhere near the high during that week. So again, we have a sideways slide on that PPO, and we see derivative oscillator continuing to lose some energy. Now back to that two-day chart. Again, price movement is below the two-day trend line and the weekly trend line, and we'll just continue to watch with that stalling out that we see there. We are just going to see how short-lived, possibly, this up movement is. We saw the market take off in the morning up, continued up throughout the day. The strongest was that last 2-hour candle in the afternoon on Wednesday the 15th. Again, we did see price movement throughout the course of the day shoot as high as breaking through the weekly and the two-day trend lines, but then, of course, market fell back off. Do not forget, still have an upward trend on the weekly. We still are in that weekly vertical crossover going up. So pay attention to that. If you do see a crossover on that two-day chart, you have the required pullback on the 2-hour chart and then a crossover going back up, you could get back in again. Now, let's go to our 2-hour chart and take a look at what's going on, two-day chart rather, and take a look at what's going on the Qs, QQQ, the NASDAQ 100. What do we see there? Price movement is above the weekly trend line. We do not have a daily trend line, a two-day trend line drawn. Why? Because we crossed over with that candle on the 14th. It crossed over going down. So we don't have a trend line. We could draw one, but since our PPO is down, we do not do it. What's going on with the derivative oscillator? It is continuing to lose energy. Even with all the up movement on the 15th, derivative oscillator did not change from that two-day candle ending on the 14th of March. So had up movement. The Qs was up 0.62% for the day. If we look at the 2-hour chart, we do see that it crossed over finally in the afternoon for that last 4-hour candle, that last 4 o'clock 2-hour candle going up. Sort of stalled out in midday and then zoomed up there toward the end. So we'll continue to watch what's going on with the Qs. No trade there now because of the schizophrenia. Up on the weekly, down on the two-day, up on the 2-hour. So we'll continue to just watch what's going on. Now let's go back to our two-day chart, and we shall check out TLT. That is the 20-year bond ETF. Had a crossover going down back on that two-day candle on the 8th. Weekly chart is still up. That happened sometime around early February when we had that crossover going up. But we've had down candles 1, 2, 3, 5 days worth of down, well, 5 2-day candles, 10 days worth of down movement. This latest day of the two-day candle broke through our two-day trend line, and of course it was up for the day, and again up pretty strong, 1.22%. If we take a look at the 2-hour candle, we can see that the TLT started moving over, crossed over going up on that 2-hour chart back at 10 a.m. on the 14th. That was Tuesday, and of course has continued to make a beeline up, broke through in the afternoon the 2-day trend line. So we shall continue to keep an eye on the 20-year bond fund and see just how high it goes. Again, still in a confirmed down move on the 2-day chart, and the weekly is in an up move. So don't have a trade there yet. We're waiting on several of these charts to see if indeed when a weekly vertical crossover occurs. And we have new entry points potentially for down moves on these charts. Lastly, we will go back to our 2-day chart and we will check out gold. Gold up the most of all of our charts, boomed up 1.87% for the day. Gold was already in a confirmed up move on the weekly chart. It, however, had crossed down strongly on that 2-day chart, 5 down candles, just like the 20-year bond fund, representing 10 days of down movement. Crossed over going down on the 8th of March. That's when we had a 2-day vertical crossover. It broke the 2-day trend line on the first day of this latest 2-day candle on the 15th. But what do we have there in gold? Even with that up movement, we have what's called a spinning top. Lots of indecision. The derivative oscillator did lose some energy, and the down movement that we had seen, strong down movement on the PPO, has now flattened off, and it's really just moving parallel, just moving sideways. So we'll continue to watch as things develop. Don't have a trade there either because of the fact that we've got up move on the weekly, down move on the 2-day. Now, if we look at what happened, we saw that the morning actually started off on the 2-hour chart going down on the 10 a.m. and the 12 p.m. 2-hour charts, and then some indecision around 2, and after the Fed meeting, man, boomed up on gold. In fact, gold has a huge wick on top, went about twice as high as gold finally settled out. So we'll continue to keep an eye on all these charts. Again, we will bring you all of the information that we see as we see it to try to keep you up to date on what's going on these charts, and when we find potential trades, investment opportunities for you to practice your virtual trades, we will let you know them. If you've not already signed up for our service where we will email you when there are weekly vertical crossovers, we will text you. All you have to do is text Charting Wealth, that's the name of our website, Charting Wealth, one word, to the number 33222 on your cell phone, and we will have you in our data bank, and we will send you that update if and when it occurs. Now, it will occur on all these charts at some point. You want to be in line to get that information immediately, because those of you who follow us, you know how valuable those weekly vertical crossovers are. They present the absolute best opportunities for entering into great price movements, and that's what we want you to practice with us. Now, if you've not already subscribed to our website, you need to do so, or to our daily podcast. How do you do that? You go to chartingwealth.com, you put in your first name, your email address, and for free we will send you every day the video podcast that we do where we review these 4 important indexes. That is the S&P 500, the NASDAQ 100, the 20-year bond, and gold. The inverse correlation on several of these funds, except on a day like today, typically means that we have the ability to find potentials for investing or trading for you to practice that all the time. And these are great liquid ETFs that give you lots of opportunities. So you have questions, problems, concerns? Hey, we're all ears. We will try our best to respond to your needs. Again, chartingwealth.com is the website. Be sure to sign up for that weekly vertical crossover text alert. Again, texting Charting Wealth to the number 33222. Be happy to make sure you have that. Please make sure also to subscribe to our YouTube channel. And if you really appreciate what we do, Go to iTunes and subscribe to our podcast also. Give us a 5-star rating. You guys have made us as high as number 9 in the world as far as stock trading podcasts go. And you've gotten us as high as number 6 in the world when it comes to stock market podcasts. We so appreciate that. We are here for you. Again, we are an education firm. We're not a stock calling service. We want you to fill out that daily market worksheet that we provide to everybody who subscribes to the podcast. You'll get a link to that. Also, the weekly market worksheet. We've got trainings at the website to tell you how to use both of those if you want to supercharge your training. You fill it out as you listen to the podcast every day. 10 minutes of your time is all we ask for greatness. Thank you so much, my friends. God bless. Take care from chartingwealth.com.